Okay, this is our post FOMC update on gold and really precious metals in general. So it's July 27th. It is the night after we had the FOMC release that happened in July, and we got the 75 basis points raise. That's the second month in a row, or I should say, second meeting in a row where they raised by 75 bips. So really, a point and a half in the last two meetings. Fed funds rate, up above 2% now, I think, at the lower end of the range even. So we'll start with GDX. This thing has gotten just kind of walloped, and it's been the last one to bottom out of GDX, silver, and gold. So I'll just go through this one first. And I say bottom, but who knows? Maybe it has it hasn't. You have a few, like, look at this strong candle where maybe it was a bottom. This strong candle, maybe it was a bottom. This strong candle, maybe it was a bottom. So there's no telling that this is going to give us anything more than just 1 or 2 days, and we've already had 2 green days. But it does look like maybe we got our low on July 25th, right? And then we had two up days. And today was the FOMC meeting, so we got continued follow through that, which was important to see. We really needed that. And on the weekly level, this is week 26, and we did make a new low this week. That was the low that we saw on the daily on day 48. And so very likely that this is our weekly cycle low for GDX. I will continue to repeat important concept to understand. Just because we're getting a weekly cycle low doesn't mean it's bullish. Sure, you could get a rally for a couple days, even a week, or you could get a rally for like a week or two. Just be careful, right? You could get a top on week 2, right? That happened to the NASDAQ not too long ago. You can see in this case, we get tops on week 6, week 11, week 7, week 12 last time. So sure, if you want to ride this thing for like a 4 or 5 week top, you could do that. More importantly, if you're trapped long, this could be your chance to unload a little something. We obviously have to see how we close the week, but this is setting up as a nice bullish hammer to get you some follow through next week. And so we work our way up. Look how far below the 10-week moving average we are. That's up here at 20, almost 29. We're down here at like less than 26. So we could see a pretty big mean reversion trade, something like that, before, our continued move lower. And that is the weekly. And if you just kind of look at the monthly, look at this thing. Yikes. Yuck. Now, this candle is going to close soon. We're going to open an inside month. Now, again, as you're watching this channel, I hope you're starting to truly observe price action. That's the whole point. Understanding how to interpret that data, how to use it to read, almost like reading a book. Because of this wick that's created here, we are going to open August, most likely an inside month. And it's going to be a question, can we get above the high for this month? Which was, call it 28.36. That's a pretty far distance from here, which suggests to me that we will probably rally to at least that level to kind of test that area, right? If it's bullish, we'll get through it. We'll work our way up the levels. If it's not, we'll get turned back, and that'll be our sort of lower high. But that gives us a good sort of sense. And you can see we already got to that level and we kind of failed. So it's a question of, obviously, that's how it became the high for this month. And so now it's a question of, do we get a chance to retest it? And if we do we get bullish follow through? And so that gives a level to kind of work off of. Well, next go to silver, which was following a very similar trajectory to GDX, I will say, but now it's actually more bullish. It's always good for silver to kind of lead. It's pretty speculative. If we look at the daily chart, silver was pretty squirrely. It made its daily swing low back on July 14th. So today, Wednesday, July 27th, was actually day 10. That was a new high. Before that, the high was actually day 4. This thing was looking very bearish. It was just kind of crawling around here. And also very equally important, it was all inside the range of this big down candle. That's important. These details are incredibly important. That's a big part of the alpha on this channel. Pay attention to that. You have this huge down candle, And then we just consolidated inside the range. We did not make a new low below that. That's why it stayed. And so technically it wasn't even a swing low. And technically it's not a swing low until we can stay above this high here at 1923. And we're just above that, a hair above that. And we're also making new highs on the daily chart. And so we kind of wasted a lot of time here sort of churning, and we're now finally making some progress on day 10. That's not crazy bullish because it means we've wasted a lot of days of the daily cycle just kind of sort of chopping around. But at the same time, if this is a weekly cycle advance, this is week 2 because our weekly cycle low would have come with that daily cycle low, and that was week 24. So that next week we consolidated, right? An inside week. And now we've just made a new high above that high for this week. I would love to see us close out the week above the high from last week. That's what we really need to see, actually. And that's just in 1943. That's actually not that far from here at all. I mean, it'd be odd if we couldn't make that move. That would be a pretty bad sign, I think, actually. And so you'd expect we close the week above there, and then we start to kind of work our way up the levels. And you'd expect we'd probably have some really big trouble around, like, the 20-21 area, 20 to 21 area, I'd say, call it. And so we'd have to see what the reaction looks like there. Still looks like we're in pretty long-term cycle decline. I mean, look at this thing. So similar kind of picture to GDX. We really need a move above the high from this month, which was in that 2050 area. So again, in that 2021 area, as I said, it's important. That's why multiple times frame analysis is so important. It helps you kind of triangulate the levels that really matter. And finally, gold is on day 5. I mentioned in the last video that this was shaping up to be something of a bull flag. You can see we got, our sort of kind of breakout here, and now we're trying to get some follow through here. So day 5, still relatively early in the cycle. Last cycle bottom on day 4. This is your daily. And then if we think about the weekly, I was saying last week would have been week 31. And so that gives you high odds that was your weekly cycle low, right? That we did get, because 31 weeks is a pretty long weekly cycle. And similar to silver and GDX, we're way below the 10-period moving average. Right now it's at 1800. It is declining as we speak. I mean, you can see it's on the decline. So you would think maybe we at least test that area. Notice we actually haven't made a swing low yet. We kind of tested that level, but we didn't quite get there. So you really want to see us above 1750, I would call it. And this is gold spot, not the futures, to be clear. This is CFDs. So you really want to see us in that sort of 1750 area, kind of comfortably above this bearish candle here. And then maybe we can work our way up to levels and even find ourselves at the 1815 area. That's obviously not huge upside from here, but that kind of gives you a sense of what the kind of possibilities might be, just kind of, structurally here. And again, I'll just point out again on the monthly chart, it's month 79 of our, call it 7 to 8 year cycle. So that's anywhere from 84 to 96 months. So do the math. If it's an 84-month cycle, we're on month 79. The high was month 56, which was August 2020. What are the odds we're going to make another new high after we've already descended down here $300 lower, or more than that even? What are the odds we're going to make a new high and then descend into the 8-year cycle low after that? That doesn't make sense, right? How likely is that? This was your cycle low for last cycle. This was this cycle was very bullish, right? Topped out on month 85 and bottomed on month 92. So it was only a 7-month decline. Notice I said only a 7-month decline. That's still a relatively long decline, right? This one was super long. 35-month top, 96-month bottom. 34-month top, 97th-month bottom. 41 top. Notice the pattern here. So again, just think about that. Let's say we're going to, that it doesn't make logic. It's very unlikely that you're gonna make that another high above. And we already had our kind of double top. We missed it by $5 in that war fueled spike. And so patience, I think, is warranted here. There's no need to try to chase anything. There are many other assets to make money off of. But this is going to be very important to watch. We're going to get really clear signals. And then, so it'll just be on everyone to be patient.